today. As you know, Alberta introduced enabling legislation, Bill 20, a couple of days ago in the Alberta legislature that introduced some of the details of its carbon pricing policy. We're going to start with an interview with Minister Shannon Phillips, who's the minister responsible. She's not the minister responsible for climate change, but she is the minister responsible for the Climate Change Office in Alberta, and the minister driving this legislation. So we're going to have an interview with her for about 15 minutes, and then 3 other individuals, experts, are going to pop up, and we are going to have a conversation. So why don't we start right now? Minister Shannon Phillips is here. Thank you very much, Minister Phillips, for taking time out of your very busy schedule. I know that there must be lots going on, not just on this file, but many others. But perhaps if we could start with just a quick statement from you about what you think the highlights are of the legislation that you've now just introduced into the Alberta legislature.
Well, what Bill 20 does is it establishes our economy-wide price on carbon, and what it does is it establishes the collection mechanisms for that price, its exemptions, and also its various rebates and adjustment levels. And so there's 2 different kinds of rebates, essentially. There's the lowering of the small business tax rate, so there's an amendment to the Corporate Tax Act there, and additionally there is rebates for lower and middle income individuals and households. The details are contained within the legislation and the appropriate amendments to the Income Tax Act in order to enable that. In addition, the bill establishes the Energy Efficiency Agency as a Crown agency to deliver the programming that will be applicable to individuals, small businesses, and various other institutional emitters, if you will, for example, school boards, hospitals, and so on. And finally, it does a few amendments to the Climate Change Emissions Management Fund, existing legislation that we inherited from the previous government, so that that legislation can conform to the broader scope of initiatives that we're undertaking with this new plan. Great,
thank you. So a couple of things here. As you know, the policy that preceded this one had a carbon price, but it did not have a carbon price economy-wide. So can you give us a sense of why it's so important in your mind to have an economy-wide price on carbon rather than just on specific sectors?
Well, you know what an economy-wide price allows us to do is send a signal to the market, a signal with respect to behavior and various choices within the market. It's certainly the most elegant and efficient way to undertake GHG abatement policies. And you know, the Leach panel examined various other approaches, including regulatory approaches and cap and trade, and it was determined that given the structure of Alberta's economy, this was the right way to go. And in addition, we've taken you know, most of the advice in terms of the Leach panel's advice in terms of how we reinvest or rebate or adjust with those carbon revenues. And so you know, what this does is it allows us a way to move forward on carbon pricing and climate leadership in a way that that does set the bar, I think, for other provinces and the rest of the continent, I would argue. But the other thing that it does is it relies on the evidence of other jurisdictions and successful approaches in other places, and so it seeks that balance, and I think we've achieved it.
Great. So, because the price is now going to be faced by consumers and not just specific parts of industry, there's going to be a household impact, which of course feeds into why you've got the rebates planned. But before we get to the rebates, I'm interested in what you think the scale of the household impact will be. So presumably a liter of gasoline is going to go up in price when this carbon price is in place. Presumably electricity is going to go up in price. So do you have a sense of, or precise estimates perhaps, of how big this impact is going to be on the average Alberta household?
Yeah, I mean, we've had a few conversations around indirect costs here in Alberta, and we released an analysis by Treasury Board and Finance that was based on the StatsCan input-output models that showed that the indirect cost impact is actually quite low within the Alberta context. We'll be putting that out with a lot more explanatory background information in the coming days. But really, the pass-through in Alberta, given the fact that Alberta is an open economy essentially, and relies for many of its goods on imports, so as a result, the pass-through is smaller than one might find in other jurisdictions. And so we found for a household, for example, you're looking at about $70 a year for a household of 2.6 individuals, between $70 and $103. So it's a very modest impact in terms of the indirect pass-through costs, which again don't take into account changes in behavior at the firm level or economy-wide in response to pricing carbon. And so, it could very well be that those indirect costs are quite a bit smaller, given that the way that we've structured the carbon price, it will invest in research and development as a public good. It will invest in energy efficiency and renewables and sort of demand-side management as a public good. We're taking some of the revenues and rebating them or reducing taxes in the case of the small business rate. But on the other side, we've got, again, we've struck the balance of how these things are handled in other jurisdictions and how they're thought of by economists in terms of the best way forward for an economy like Alberta's.
So those household impacts, if they are $70 to $100 or so per year for a typical household, is that the kind of the magnitude that we should expect then to see in those rebates? And how did you determine that the rebates would only go to basically the lower income half of households? 66% I think you've got. But is that the sort of scale we should be looking at?
Well, the rebates are actually based on average use. So again, this is a chat room, if you will, where I could get a little bit technical. And what the rebates
you like technical.
We're fond of that kind of thing at the Ecofiscal Commission, I think. So I mean, the rebates are based on average use. Right. So if you're a middle income person, it's based on your average use as an individual or as a household. That's how much you will get as a rebate for your direct cost. Right. And so for many people, they are not using the average, particularly lower income people, especially if they avail themselves of some of the programming, either on the efficiency side or the proliferation of transit options, these kinds of investments that will also be enabled by the carbon levy. And so what that does is essentially establish, an output-based allocation, a free CO2, if you will, based on income, so that if one reduces beyond that average, then one comes out ahead, just as one would if you are a petrochemical facility operating under a performance standards situation. And so that's kind of how we structured this. It's based on those direct costs because one can't really predict the firm level or other sector level behavior that will occur as a result of pricing carbon. We know there will be some effects, and there will not be the full indirect costs because firms will change their behavior. We know that. And so that's kind of what we sought to achieve with the rebates.
So how about on the business side? How should we see this policy in terms of addressing the competitiveness issue? So whether you are a refiner or whether you are a small business, a restaurant, if there's going to be now a carbon cost on these businesses, and they have, I think, a legitimate issue, a legitimate concern about competitiveness, what is the bill going to do for them?
Well, we take those competitiveness concerns really seriously, and that's why they were examined at length within the Leach panel process. We did technical engagements with pretty much every aspect of industrial endeavor and economic activity in the province, and it is a very wide base of energy-intensive, trade-exposed industries, and building on some of the work that the Ecofiscal Commission did, and I think it was last fall that it was released, given the trade exposure of the Alberta economy at 18% of GDP, as opposed to in BC where you're looking at 2 or 3. it calls for a different kind of approach, both to how we price carbon, but also how we recycle those revenues. And so what we've decided to do there is go with a series of performance standards. It sort of improves some of the inefficiencies that we found within the current site-based, facility-based regulation system for large final emitters. And so those performance standards, though, are not coming in as part of this bill. They're a little bit longer runway, and the reason for that is when we first were sworn in last year at this time, we updated the specified gas emitters regulation, and we gave it a couple of years based on the Premier Notley's direction and assurances to industry there would be no surprises. So the specified gas emitters regulation phases out for beginning 2018. And the performance standards start in 2018. So it's lagging a little bit, the economy-wide price. We also need that time to thoughtfully develop those performance standards, because they're not just for the oil sands, they're for the petrochemical industry, they're for fertilizer companies, the cement manufacturers, and others. So that's taking into account, again, this approach of having output-based allocations.
Okay, I don't know if anything happened on your end, but we can still see you and hear you.
Okay, yeah, something weird happened, but we'll ignore it.
You mentioned revenue recycling a little bit, but my understanding is that the legislation is pretty flexible, pretty vague about how most of the revenues will be recycled. Is it because you still want to figure that out, or you're just going to give yourself flexibility to do it in different directions, or what are your current thoughts on this?
The details are actually contained within the budget, which we just passed in Budget 2016. So in there you find $45 million for the Energy Efficiency Agency, for example, over 5 years, $645 million. For example, this year we will be only putting $5 million towards green infrastructure, because that is for the planning process. We want to make sure that we're undertaking these efforts carefully, but over the 5 years it's a $2.2 billion commitment. We've got $175 million this year for initiatives like innovation and technology. We heard loud and clear from not just the oil sands industry, but others as well, that they want us to take a thoughtful approach on how we recycle those revenues back into research and development, green tech, and so on, and taking a thoughtful approach on the part of government to those partnerships and those initiatives. So that's in there with, so that $175 million is renewables, bioenergy, and the innovation and technology pieces. We've got some funds in there for training and transition for coal communities and for Indigenous communities. Those funds ramp up over the years. They're relatively small in the 16-17 year, given that it's a relatively small window of time that we're collecting the levy, right? It's the first quarter, essentially, a little bit more than a quarter of 2017.
So my last question, I guess, before we'll bring in the others. As you know, British Columbia has a revenue-neutral carbon tax. I'm sure there have been people that have told you that carbon pricing in Alberta should be revenue-neutral. And there might even be somebody on this Google Hangout who will express that view. What do you say to them about why the Alberta government chose not to pursue a revenue neutral? Because there could have been larger rebates to households, you could have had bigger cuts to small business taxes, or some combination of the two. So what's the main argument for not choosing revenue neutrality?
Well, we have a much different economy than BC's, for example. For starters, we're starting so far back the starting line from other jurisdictions with respect to efficiency and so on. So there is a space there, and it is in the public interest to put people to work and to ensure that we've got the right kind of investments in efficiency throughout the economy, in our public sector infrastructure, and also in providing the right incentives and partnerships in the private sector and having the resources to do that. A year ago we had a little referendum on our general corporate tax rate, and it was determined by the people of Alberta that it should rise by a very modest 2 percentage points, still putting us within the bottom of the pack with respect to that general corporate rate. So there really is a lot more appetite from Albertans, and by that I mean both the public and various industries for government to take an active role in research development and innovation and technology, because that challenge of reducing the carbon in the barrel and ensuring that our economy, in particular here in Alberta, is resilient to a carbon-constrained future, which we know is coming. Those challenges are going to mean all hands on deck, and it's going to mean a robust role for public investment in those endeavors. And I don't think there's any way to get around that, given the challenge, the magnitude of what we have to undertake here in Alberta. So that's for those reasons that we chose the path that we did. Having said that, we've done the rebates based on the most need, right? I mean, there's sort of diminishing returns when, and as you go higher up on the income scale, folks just have more options available to them to make different choices and reduce their use, and therefore reduce their costs. And so you want to try to achieve that balance. With 60% of households getting the full rebate and 66% getting at least a partial rebate, we think that we've ensured that we've got the right adjustment, particularly within the economic context of what Alberta is facing and the challenges that families are facing right now.
Great. Well, before I bring in the others, let me just say that I just want to congratulate you. I know that designing carbon pricing policies is a complex thing. I think doing it in a province that relies so heavily on being a producer of fossil fuels adds an extra layer of complexity, and that on top of Alberta's existing fiscal challenges that are pretty significant. So I just want to congratulate you for getting this and for pushing this along. That doesn't mean we won't offer constructive criticism, in the future. You can always count on us for that. But thank you very much for being here today. Now, you're going to stay here for a little while. Let me now introduce our three experts who think about these issues from a different perspective. My first one is going to be Trevor McLeod. He is the director of the Centre for Natural Resource Policy at the Canada West Foundation. The second one is Sara Hastings-Simon, who's the director of the Clean Economy program at the Pembina Institute. And Trevor Thome, who's the assistant professor of economics at University of Calgary. Since we have two Trevors, Trevor McLeod is going to be Trevor 1, and Trevor Thome is going to be Trevor 2, and Sara is going to be just Sara because she's all by herself as the only Sara. So welcome to all three of you. Now, the rules of the game that we've agreed to are that I'm going to ask each of you to give us, 90 seconds or so preliminary thoughts on this policy as it is looking to be enacted. Good thoughts, bad thoughts, whatever thoughts come to your mind. We'll then seek out the areas of disagreement and the areas of agreement. And actually, since the minister is going to be with us for another 15 minutes or so, a little bit less, you can actually pose some of your questions to her rather than to each other. So why don't we begin with Trevor McLeod. Trevor 1.
Sure. Well, thank you, Chris. I take a look at this from a pragmatic perspective. We do need to reduce greenhouse gas emissions, but we also need a laser focus on the health of our economy. And so I think we need to pay attention to all sorts of policies, a suite of policies that does that effectively. I think the Alberta government should be really commended for the way that they've approached this and for taking action. It's not easy to take action on this type of thing, introducing any tax. But also for playing offense and not defense, and more importantly, I think for starting a mindset shift. There's been this notion that large final emitters should be responsible solely for solving this problem, but we all know that each of us has a role to play in this, and there's some accountability, individual accountability there. So this broad-based carbon price does change that conversation. I think in the last couple of days we've actually seen that conversation change in Alberta, which I think is really fabulous. And I think the best carbon prices are those that stick, right? Those that that won't go onto the dustbin of history. So I'm pleased to see the government was flexible in its thinking about how the money can be spent. If we did want to move, for example, to a revenue-neutral carbon price at some point, the legislation allows for that. So I'm really pleased with what I saw there. Thanks.
Thank you, Trevor. Okay, Sara.
Thanks for having me here today. So, I think this is great news that Alberta is taking a big step forward on climate action. And there's broad consensus that an economy-wide price on carbon is the most effective and efficient way to reduce emissions, and it allows consumers to have that choice about what they do. I think the structure of the levy and the rebates that we've talked about will do a good job of protecting the low and middle income consumers. I think it's important to note that without these rebates, a carbon tax is actually a regressive tax. So providing rebates is really addressing an issue with a tax, not sort of introducing something new in that sense, but still providing that signal to reduce costs. And so we've run some of the numbers looking at the average use of energy by low and middle income households and how that compares with the rebates and the costs. And so what we found was that in 2017, low income consumers, after all of the indirect costs are accounted for, will still see a savings of somewhere around $40 to $60 at the end of the day. And middle income households will pay somewhere around $10 to $35 total for the whole year after those rebates. So I think it's important to keep those numbers in mind, right? We're not talking about something that's unmanageable for these households. And then putting the money into programs like energy efficiency is really going to enable Albertans to reduce their energy use in homes and businesses, which is going to further reduce emissions, but actually also increase their savings and help protect them against energy prices in the future, which, as we know, can be volatile. And finally, I think that the commitment to invest in clean tech and other areas of the new economy makes a lot of sense. I think we should look at it in terms of this is not actually something new for the province. Alberta has a really long history of successful government investments. One of the most famous being AOSTRA, obviously. But it actually goes back much further than that, to the really early 1900s of supporting innovation and scale up of new industries to grow the economy and make Alberta what it is today. And so this is really, in my mind, a continuation of that commitment, and I expect that Alberta will continue to be successful as we have in the past.
Great, thank you. Okay, Trevor's home. Trevor, number 2.
Well, first let me say that it's really great to be here. I mean, the Ecofiscal Commission generally does very good work, and Chris, you in particular, so it's an honor to be a part of the panel.
Thank you. I'm a little troubled by the word generally does good work.
No, I meant in general. It always does good work.
Thank you, Trevor.
So my thoughts on Bill 20. First, I think it's always a great day when policymakers take the advice of economists, especially in an area like this where there's such a strong consensus that pricing carbon is the most efficient way to go. I mean, it's hands down. And we can have a debate about what mechanisms you choose to price carbon, tax versus cap and trade. And we can have debates about what we do with the revenue, how we recycle those funds. But the principle of pricing carbon is on very solid foundation. And so I think the government deserves a lot of credit for going ahead with that. Now, the bill in particular, I like especially because it is written in a very flexible way. It doesn't itself dictate what the money will be used for. It doesn't itself say how the funds will be recycled. It really just lays out the framework to price carbon in this province. And many options are on the table, and what the government does in the future can change and adjust. And I think, as the minister mentioned, how the money is spent is really a budget decision. It's a completely separate conversation that we can have. The issue of carbon pricing, whether or not you think the funds should be used for energy efficiency initiatives or debt repayment or tax reductions elsewhere, none of that has anything to do with whether or not we accept and embrace the ability of carbon pricing to efficiently address Alberta's emissions challenges. And so I'm really glad to see Bill 20 brought out.
Great, thank you very much. Minister, would you like to respond to any of those things? I mean, nobody was throwing stones much at what you folks have been doing. We got to get some disagreement here, but do you have any response?
Well, I've got plenty of that in my future. I'm going into question period right away. But you know, at the end of the day, you know, Trevor's right that the reinvestments, or both Trevors, I guess, the reinvestments are values judgments, and in many ways, and their values judgments based on our assessment and our appraisal of what the best things for government to do within the Alberta economy right now in this current economic circumstance, and also moving forward. And we've made the commitment around diversification, around new industries, and embracing some of that investment that we know is out there just waiting to invest in Alberta. And we've made the value judgment that we think that public transit and public infrastructure is a public good, and that it ought to be invested in. And we're listening to Albertans in that regard as well, because we don't just have economic considerations. We also have values judgments that are coming from the people of Alberta. And what the people of Alberta have said very clearly is we would like diversification, we would like to refurbish our international reputation, we would like to access new markets for our products, and we would like to see the results of carbon pricing in our daily lives, whether it's through efficiency or more renewables and so on.
Okay, let me pose a question to the two Trevors to connect things that they both said. So Trevor number one said, I'll put words slightly in your mouth, but nothing serious, I think, that you'd like the policy to be durable, okay? So you want the policy to last, and you think this policy will last. I know Trevor number two has written in the past about the positive case for either revenue neutrality or at least using a significant chunk of the revenues to reduce taxes. I want to connect those two ideas, because some people will argue that one of the ways to make a policy very durable is to actually use the revenue to reduce taxes, so that any subsequent government that wants to turn it around or eliminate the policy would then have to raise those taxes again. So the minister seems to have disappeared. I'm not sure if that's permanent. Yes, I think she's permanently gone now. But Trevor, and Sara, please get in on this as well. If you believe in durability and you think revenue neutrality helps, then comment on that. Trevor, too, to start.
Yeah, so I guess how I approach this is really from the results of a lot of research in public finance economics, where there are distortionary effects of different taxes. Some taxes are better than others, and there is an efficiency enhancing effect in terms of productivity and overall economic activity from lowering the more distortionary types of taxation. That's corporate income taxes and personal income taxes in particular. And so the case, I think, for revenue neutrality rests on correcting and mitigating those tax distortions. There's also, for a couple technical reasons that I guess this webcast isn't best to go into, the carbon tax worsens those pre-existing distortions. And so using the funds to lower distortionary tax rates can be quite helpful. But I do recognize that that implies we would need an HST in Alberta. It's not as though we're swimming in revenue here, and to use the carbon revenue to lower other taxes, we would need additional sources of revenue from other areas, hopefully efficient taxes like an HST. And that really does present a political challenge to not only this government, but I think any government here, certainly up to this point. There is also the political constraints around people did vote for a corporate income tax increase, and so how can we expect a government to then turn around and less than 1 year later lower those tax rates? And so I do understand where the government is coming from here. And so when I call for revenue neutrality, what I'm really calling for is an HST.
Okay, that's good. Okay, it sounds slightly different in terms of the wording, but okay, I take the point. Trevor number one and Sara, do you have comments on the revenue neutrality and the durability argument?
Yeah, I think durability once it's in place, but even in terms of getting it in place, it's important to get that public support. I would say that Alberta, if you boil it down, really chose to support existing industries, right? The energy sector with a real focus on these performance standards and sort of a longer piece. Whereas BC, with putting a revenue neutral carbon price in place and lowering corporate income tax rates, et cetera, I think that they really chose to expedite the move toward a low carbon economy. And so, durability, I think that the legislation, as I said, is flexible enough to allow us to change our thinking and our approach over time, which I think is absolutely essential. To your point on the corporate income tax rates being lowered and then the difficulty of changing things. Absolutely, if you can get it in. But it's a matter of, right now I think it's a matter of whether you can actually sell this for the long term in Alberta.
Sara, do you think are you worried at all about the durability of this policy, or do you see ways that you can enhance its durability, whether it's through taxes or other things?
Yeah, so I mean, I think there's the important point also that this is really part of a climate leadership plan that's meant to reduce emissions overall. And so while we all know that an economy-wide price on carbon is a key and a good component of that, I think we also have to all recognize the fact that there are market failures. There are reasons that a tax alone, and especially a tax at the level that we're talking about, or a carbon price of $20 and $30, is not quite enough to really get us there all the way. And so, in my mind, if we're going to, if this is the key component of the climate leadership plan, we also need to be sensitive to the fact that we're going to need to be doing some other stuff that are reducing emissions. And so the use of that money to do those things, to invest in energy efficiency, which is ultimately going to lower the costs of a carbon levy for all Albertans who take advantage of that, I think is another way to get at that acceptability, but one that does more to actually reduce emissions than just going for the neutrality piece.
So I think Trevor Thome had a follow-up to that.
Yeah, just to quickly mention that there are quite a number of very strong cases to be made on subsidizing basic research, those sorts of things that are genuine public goods, public transport, etc. But it's important to separate the use of funds from the sources of funds. Okay, so saying the carbon tax revenue can be used to lower other taxes does not in any way preclude funding those alternative initiatives. It really does just say we should raise the money to pay for them through efficient sources.
Right, right. Good point. Good public finance point. I want to come back to Sara, but also others feel free to jump in. Because Sara, you've mentioned now a couple of times investments in energy efficiency. And I'd like to know a little bit more in detail what that means. Because, energy efficiency is a wonderful sounding concept, right? Nobody on the face of the earth could possibly disagree with it unless your business model was based on inefficient energy. What does it mean to make investments in energy efficiency? Can you give us some examples?
Yeah, so energy efficiency, as I said, I think it's generally accepted. It's also generally thought of as not that exciting, and so that's why there needs to be special attention paid to it to address some of those barriers. I mean, I think it's important to note that where we're starting from in Alberta is a starting point of, we have no ongoing energy efficiency program. This makes us, up until now the agency is being created, this makes us the only jurisdiction in North America to hold that claim. And so, we're sort of a little bit starting from behind there, and it's something that essentially every other jurisdiction in North America has seen the value of. So what does that look like? I mean, on the simplest level, it looks like things like rebates for doing things to your homes and businesses, changing out light bulbs, changing out windows, insulating building walls that are going to reduce the energy use that you have in your homes and in your buildings. That's great because it comes with jobs, it comes with savings. The economic case for it is very strong. Going forwards, we see that other jurisdictions have also, as they've put these programs in place, made smart choices around how to structure them, right? So you can go beyond just giving rebates to helping people finance the upfront cost of them. You can do things like tie financing to your building so that you actually take a loan out against your home to replace your windows, and that loan is tied to the home. When you sell it, you along with the windows, sell it on. And you can structure that in a way that from day one, the energy savings you have more than pays for the cost of the loan. So it's some of those actually innovations in financing that help to unlock energy efficiency.
Right. So you state that there's a strong economic case. Do the other two agree with that? Is there a strong economic case? And I'm wondering, it's one thing for these policies to be effective in improving energy efficiency. It's another for them to be cost effective in doing so. But there are other things that you could choose to complain about, perhaps. So Trevor, do you have a view on energy efficiency programs? Trevor, too, sounds like he's nodding his head there.
Oh, yeah, only to say that there there are estimates. McKinsey Consulting has produced these estimates on what the kind of implied cost of abating a ton of emissions from various activities are. And if I remember those results correctly, these kind of simple home retrofits or maybe installing new thermostats, the Smart Nest thermostat or things like this, those improvements in energy efficiency, according to their results, actually have negative costs. They kind of pay for themselves. And for whatever behavioral reason that a psychologist might be able to inform us of here, they're not undertaken. And so for the government to do little nudges to push people in that direction is, I think, quite sensible.
Yeah, I would only... Go ahead, Chris.
Trevor McLeod, did you have a response to that?
Only to really agree. I mean, the devil will be in the details here. As we have an announcement of a bunch of money and an organization, an agency to deal with this, but we don't really have any details on how to do it. But conceptually, energy efficiency is a great place to spend our effort.
Okay, folks, I really have to find some disagreement here, right? There's just got to be some disagreement. So
it's just the right policy.
How about this? Where do you think? Well, actually, can one of you tell us, based on the policy, the enabling legislation, was there an indication of where the price will go beyond 2018? Because in the earlier announcement back in November, there was an indication. So is there an indication in this legislation that it will rise gradually? And whether there is or is not, do you have a view on where it needs to go? Let's start with Trevor McLeod.
I didn't see an indication in the legislation as to where it would go over time. I think honestly the challenge that they're going to be facing right now is how can you get the public on side with this concept of a price, and so I'd go back to the ways to spend the money and what they're focused on. I think if you want to get some disagreement, the disagreement in Alberta these days has been about the rebates and the wealth redistribution piece that might be fertile ground for some discussion.
Okay, Trevor. Trevor 2.
Yeah, so they did actually provide language in Bill 20 about what the rates would be going forward. So they specify the rates for 2017 by a variety of fuel sources, and they specify the rates for 2018 and subsequent years at these fixed particular rates. And so unlike what might have been, or what was recommended in the Leach report, there's no inflation adjusting to those numbers.
Right.
And so in 2018, we're going to see that roughly $30 per ton equivalent charged on fuels, and it'll remain there. Won't grow with inflation. Now, as Andrew has pointed out to that point on Twitter, I mean, it really does depend also on what other jurisdictions do.
Right.
If jurisdictions around Alberta increase their carbon price, then we will with it. And so I think automatically adjusting for inflation, I think that might have been a good way to go to ensure that there's this automatic mechanism to increase carbon pricing, even just a couple percentage points each year. But the government can always revisit the level based on what other competing jurisdictions are doing.
Okay, now let me just take a brief moment for an advertisement. One of the things I should have said earlier, and I didn't, but I'll say it now, is that if you want to send, if the audience wants to send questions into us, you can send them by email at info@ecofiscal.ca. You can send them by Twitter, and the hashtags are ABClimate and Ecofiscal. And we are taking questions. So let me actually pose one question that came in to us, and it is basically to explain why, if households are going to get cash rebates of whatever size, why is that not undermining the fundamental behavioral change that we're expecting to follow from the carbon price itself? So, I mean, and this is a very common question. You probably all explained it many times to different people. But Trevor McLeod, why don't you start? Why is it sensible to have the combination of a carbon price and a lump sum transfer back to those households?
Well, look, there's a lot of evidence to suggest that carbon prices like this or consumption taxes hit low and middle income households disproportionately. I'd let the economist explain it in some detail if that's what you're looking for. But I think there's enough evidence to suggest that there's a good reason to send some of those checks out. the debate that's happening here in Alberta is really one about the redistribution of wealth. And to a certain extent, I don't know that we should be that surprised that the government that frankly ran on that platform of redistributing wealth would do a bit of that with a mechanism like a carbon price and how they're going to spend the money, at least in the initial stages. People like to receive checks, and if 66% of voters get a check in the mail, that's probably helpful for selling a policy. So I'm not sure we should be particularly surprised about it.
But when you say that the transfers are redistributing wealth, aren't they just redistributing wealth that would have been redistributed from the carbon price? So I mean, that's they're not doing the transfer in the absence of the carbon price. They're doing the transfer in response to the carbon price, aren't they?
Right. So exactly, it depends on the degree to which how big the checks are. At some point, if they give everything back to low and middle income folks, then there will be a redistribution of wealth. All I'm really saying is that this is the debate that's going on in Alberta right now, and that it's more of an ideological debate than a debate about the system itself. So,
Sara, you had some numbers in your opening couple of minutes that I want to come back to because they're on this point. You said that you had done some modeling, I guess it was at Pembina, that the carbon price would generate, the carbon price and transfer combination would generate $40 to $60 of savings for low-income households, and it would be a net cost of $10 to $30 for middle-income households. Did I understand that correctly?
Yeah, that's right. And so looking at those costs and looking at this question of wealth redistribution is one part. Then you are also asking about why do this? Does it really incent the behavior change that you want? So on the first, I think the wealth transfer piece, you also have to look at what else is being done with the money, right? So when you talk about having an energy efficiency agency that's going to be giving rebates to folks who take energy efficiency actions in their homes, it's also important to recognize that that tends to skew towards the higher income portion of the population because they have the they have the upfront capital, the upfront cash they need to do those kinds of renovations, or they have the time to do them, whatever the reasons are. The economists can speak more to that. But the fact is that skews more towards the higher income. And so, I think without a really detailed model, it's pretty hard to say that, this is going to be a wealth redistribution if you're going to give more rebates to low and middle income folks, because you're going to be getting rebates to higher income folks via the energy efficiency measures, for example. And so I don't, one would have to dig quite deeply into the numbers there. Obviously, what matters for the Albertans who are most vulnerable and who might be unable to deal with facing additional costs, from day one, the rebates are going to protect them against that, so that you don't have low-income families that are going to be hurt by this. And I think that's quite important. That's where those rebates come in. But everybody still has the incentive to reduce, right? And that's because maybe Trevor can give the economics professor explanation of it. The way that I think of it is that the rebates just turn the cost into a savings. And so, now you're at a starting point where you're not paying something for the carbon levy, but if you reduce further, that's just money into your pocket, both in terms of the carbon price and in terms of the energy cost. So you still have that same price signal.
Great. Now, I'm not going to actually ask Trevor to answer this question because I'm going to deny him the opportunity to talk about income and substitution effect on air. Okay? I'm not going to let you use those words, Trevor. What I want to do, I want to put the three of you on the spot. I want to force you to be a little bit critical. So I want each of you to offer one thing, this is constructive criticism, right? But one thing that you didn't like in the sound of this legislation, or one thing that was missing that in your view shouldn't have been missing in this legislation. But there's got to be something that in your view they didn't do right, or they did too much of, or they did not enough of, or they just did it and they shouldn't have. So let's start with Trevor too.
So, being forced to be critical, I'll take that challenge. I guess if I were to give one piece of advice, it would have been they should have made the rebates bigger. We're having this debate about whether or not the rebates are sufficient to cover the direct and the indirect costs associated with the carbon price. And the rebate levels that they chose are, very much in line with the numbers that I've seen. I've tried to crunch the numbers myself as well. So they're not obviously too small. They're not obviously too large either. I guess I would have liked if they erred on the side of providing too large of a rebate. Now, that being said, the rebates are not set in stone. We're just going through a census right now, and we will have very good detail released next year about what specifically households are spending on natural gas, electricity, gasoline, and income. So we can change the rebate levels as new evidence comes in.
Exactly. So that comes back to the point of flexibility, which is after this carbon price gets put in place, and especially after it increases after 2017, then the dust settles and you can actually get a much better sense of what the household impact is, and for that matter, the business impact, and you could adjust those business tax rates as well. So that flexibility is useful. Okay, Sara, critical for you.
So it's tricky because to Trevor's earlier point, right, we have the broad stroke outlines, which I think look good, and we don't have a lot of the details, right? So how will the innovation money be spent? Is that going to be, done wisely that links to the market, or is it just going to be handouts for folks? So some of those details, I think remain to be seen, and for me, that's what I'm watching closely to understand, where there might be missteps. I think if you force me to say something now, then I'll come back to this question of the escalating over time, and particularly the link to inflation, right? I think there's no reason not to have a carbon price escalate with inflation over time if you're really talking about wanting to see that price on carbon being applied.
Except that some of the jurisdictions, the neighboring jurisdictions or the competing ones, don't have theirs escalating even with inflation over time.
Yeah.
So if you are really worried about that, and that's both an economic argument and a political argument, right? I mean, I think we are seeing some people argue in BC, for example, that they're going to hold steady and wait for others to catch up.
Mm-hmm.
You could spin that as an economic argument. You could also spin that as a political argument.
Yeah, and I mean, my hope is over time you get there, right? People see that, and I've seen this happen with other policies. The one that sticks out to me is in the U.S. when you talk about renewable energy policies, people set targets, and then as they got closer and closer to those targets and realized that they weren't that hard to meet, they actually, ratcheted them up and realized that it made a lot of sense and they could do more. And so, I think we'd like to see that, the carbon price comes in, people realize that it's actually workable, it's not causing a lot of problems, it doesn't, it's providing them money for investment in the right places, and then you see that price tick up as the global economy does as well.
Good. Okay, Trevor 1.
Well, unlike governments that like to send very visible checks to households, I would have preferred to see that done in a different way, maybe taking people off the tax roll at the lower end and personal income tax, something like that. So some of that, but most of my criticism on the climate leadership plan comes down the road when we talk about electricity and how we're going to get there and all that fun stuff. So this one, I think they did a pretty good job.
But so let me just, I want to understand what you mean. So rather than a lump sum check in the mail to 2/3 of the households, you would like them to do the same sort of income replacement, but do it through the income tax system?
If you're going to do it, and I recognize that it makes sense. So when I talk about flexibility and the importance of a climate strategy that sticks, carbon taxes are not easy things to put in place, and so I recognize the need or the desire to send checks to folks in their households.
But the income tax system in Alberta has only one tax rate, right? It's flat at 11%.
It was flat. It's no longer flat.
Oh, of course, that got changed. So what is it now? I mean, and how would you
have the numbers on top of your head?
Right. Okay. So this comes back to the durability point. So the check in the mail is a very transparent thing and probably helps for buy-in. But to enhance durability, I think you're arguing it might be better to do that through the income tax system.
And efficiency. Just the cost of administering the program as well. I'm not sure what the differences would be there, so I'd like to take a closer look at that.
Okay. I want to come back to something that Sara mentioned about investments in innovation. And I think I might have asked you this, Sara, on the previous Google Hangout, whenever that was, a few months ago. But if we want to if we want to encourage innovation and drive innovation, whether it's in the oil sands or whether it's across other sectors of the economy, and we want to put public money into it, are there good ways to do it and bad ways to do it? Are there ways to make sure that it doesn't become political? Are there ways to make sure that we actually are taking sensible risks rather than less sensible risks? So, I mean, can we build a machine to do this well? And what do we know about that?
Yeah, so the answer is yes, we can build a machine to do it well. A couple of the things that we know about it, we know that you should look at tying things to the market, right? So for the later stage innovation, it's not government funding everything, but it's government providing support alongside private capital, and that does two things, right? As government, you get to follow the private capital signals, follow the market signals, and you don't have to be making those choices and picking winners. And it also just increases the amount of investment that you have because it's not government who has to be spending all that money. You should also be looking for projects to finance, right? So we're not talking about supporting specific companies with just overall corporate finance, but really finding specific projects that make sense and putting money into those. And we have a really great example if we look south of the border in terms of the U.S. loan guarantee program, or loan program office, and some of the work that they've done in investing in innovation over the past 5 years or so. You know, Tesla is one of their beneficiaries. There's a long list of others, and so you know, it's not something that we need to reinvent the wheel here in Alberta. We should follow those. We should follow those examples, and you know, the outcomes that those show, the job creation, the economic growth that those provide. And it's important to note that actually that program in the U.S. has actually made more in interest back than losses, say, from the handful of projects that didn't work out. So definitely some good lessons for us to follow, and that's one of the things I will be looking for in the innovation side.
Okay, either Trevor on that, on public money going to drive innovation. Does it work? Does it not work? How to make it work?
I mean, you have to be careful about that issue, of course, but if you do look at emissions on a global basis, if you're looking at reducing emissions globally, trying to get to those 2 degrees Celsius targets that we set in Paris, you know, we're going to have to put money into technology and innovation in order to develop technologies that are transferable to places like China and India, where emissions are rising quickly. So, so conceptually, I think, you know, you got to be careful about governments putting big money into things, but at the same time, I think we have to have a higher degree or risk tolerance for some of these big investments. You look at Saskatchewan and CCS. You know, if that were to be successful and deployed internationally, you could really make a dent in global greenhouse gas emissions. So I think one, the risk tolerance, we need to have a higher risk tolerance, but you know, it is dangerous when you start traveling down that road and picking where the technology is going to be. You know, who's to say that wind and solar aren't yesterday's technologies and something totally different is going to replace it? You know, as soon as tomorrow.
I think many people would be okay with the idea of having a higher risk tolerance if they knew that the investments were driven purely by, let's say, economic criteria. And some were risky and some were less risky, but they weren't political. I mean, I think people would be in favor of risk taking because they would know that that's, you know, that the world is uncertainty and you've got to take risks. But that suggests to me, it's always suggested to me that these sorts of investments be made by some very arm's length organization. It could be public funds, but not being in the hands of, directly in the hands of elected officials, and that's hard to do.
Market.
So this,
Trevor?
yeah, we actually have institutions that function that very way. So the Federal Natural Sciences and Engineering Research Council, for example, would be a good model. So they dole out, I think in the last budget, not quite close to $1 billion, and they do this by having a pool of funds, and then NSERC coordinates external academics or engineers to review proposals and rank proposals, and then the funds are doled out in that way. And so that really does separate the decisions from, or it separates the politics from the decisions about which projects deserve merit. So that's a model that could easily be adopted.
Is that the model that currently is used in Alberta's Technology Fund?
I'm not sure.
Does anybody know about that?
I don't think so, no.
Then we're going to have some future discussion on that. Okay, we are down to the last 4 minutes. So let me just ask each of you for your last 60 seconds, say whatever you want to say about this policy, either what it is or where it needs to go, but your last 60 seconds to the people that are out there in Google land. So let's start with Trevor Tome.
So I guess the last 30 seconds is this is a really important policy area where there is room for disagreements. There's room for reasonable disagreements, right? And so it's not helpful to engage in a debate by demonizing the government who puts forward a policy that's very reasonable and supported by a lot of people. You can absolutely have alternative views. Maybe you prefer much more an interventionist approach. Maybe you prefer cap and trade, or maybe you prefer, as I do, lower corporate and personal income taxes in exchange for the carbon tax. But these are reasonable debates, and so I think a lot of people, opposition parties here especially, need to kind of take a breath and have a well-reasoned discussion on the merits of the policy.
Good, thank you. Sarah?
Yeah, I agree with Trevor that there's some interesting debates to be had about the details, but I think the overall, putting a price on carbon is clearly the right way to go, and I think we've all agreed on that here today. So there's something to be learned from that. I think the only other thing that I would add is around, we talked a bit about energy efficiency and about government investment, and we kind of hinted at it, but I think the other thing for me that we look for coming out from this is investment, and it's investment that's going to come from the private markets, from within Alberta and from outside of Alberta. There's a lot of infrastructure to be built. There are a lot of local jobs to be created by building that infrastructure, whether it's insulating houses or building wind turbines or building, whatever new technologies come out of those innovation funds. And so, I think it's important to recognize that this policy is going to both address the carbon emissions, but it's also going to be putting us, on the right track to staying competitive in a low carbon world in the future, and it's going to be helping us to create those jobs and economic activity that we really need here in Alberta now. Perfect.
Trevor McLeod, last word.
Yeah. So a carbon price makes good sense. A tax makes good sense. The debate we're having in Alberta is really about, what's the future of the energy sector. And I think that the approach that the government of Alberta took with, dealing with energy-intensive trade-exposed sectors makes great sense. But the debate we're really having is about how long is it going to take to move to this low-carbon future. And some would want it next Tuesday, and some think it's going to be 100 years. And so while we need to protect the industry that feeds us today, we need to look at the fiscal regime and how we structure it into the future, so that those companies, those firms that are going to sustain us down the road, see Alberta as a place to come and set up camp. And so it's really tricky. I think the government struck a nice balance, but we're going to have a lot of debates on that over the next number of years.
Right, good. Well, I have a feeling also that that we will be having another discussion like this at some point when they release their detailed policy thoughts on on the large final emitters. The carbon, the CCR, right? The climate. What's it called? The CCR. What's the acronym?
Competitiveness. Climate competitiveness regulation.
Climate competitiveness regulation. All I can think of is CCR. Climate competitiveness regulation. So I feel that we're going to be having a discussion like this when that gets released, because that's really going to be on on the competitiveness issue in those sectors, and we'll see some details about the performance standards, etc. Anyway, until that time, thank you to the three of you, Trevor Tome at University of Calgary, Trevor McLeod at Canada West, and Sara Hastings-Simon at Pembina. Thank you all very much for taking time out of your busy schedules to talk with us about this. I'm glad we were able to get Minister Phillips in on the event. So I think until our next event. Thank you very much, and I wish you all a very good day.
Thank you very much.
Thanks, Chris.
Goodbye.